Okay, cool. We'll fire it up. So, welcome, guys. This is our Allstate monthly product training for short-term medical, which just made a comeback within the last week or two here. So, exciting times. For some of you, you might already be familiar with the product. It might be something you sold before in years past. Some of you might just be trying to get your feet wet right now in it, right? Dipping a toe into this short-term medical thing. And this is a good place for you guys to be. All right. So, first thing I'm going to start with, get the legal stuff out of the way. Okay. What all of this slide says in more or less words here is, guys, when you sell something that isn't Obamacare, like short-term medical, right? Just don't lie to your customer. Don't tell your customer if you sell them short-term medical, don't tell them that it's an Obamacare plan. That's all this is saying in more than less words is don't be shady. Don't be a shady salesperson. There's no need to be. Just tell your customer what you've sold them and you'll be fine. Okay. So with that, we're going to jump into short-term medical. Now, big thing, framework before I get into the plan for you guys. Okay. There are a lot of changes that are happening in the industry. Some just happened, some are happening, and things to be aware of and looking out for, especially for us as an agent force. Okay. First one is federal law removed Biden's ruling from last year against short-term medical. So now federal law does not limit short-term medical to 4 months in length anymore. So what that's done is that's opened short-term medical back up to how it used to be before September of 2024 for the most part. Okay. So what happened is in the majority of states, as soon as federal law changed a week or two ago and said, hey, we don't care about this 4-month limit on short-term medical, most states went the simple route and said, hey, we're just going to keep going with how we were before Biden's ruling. And so for the vast majority of states, they're back right where they were when we left off last summer. Okay. And so what that means to you guys that are newer is now instead of short-term medical being 4 months in length, there are some states that are back to 36 months in length. Some states are back to having 3-year plans for short-term medical. Okay. There is a call out I want to make. There's one state that decided for whatever reason that they were not going to go back to how they were doing things previous to Biden's ruling, and that's the state of Texas. So a state we write a ton of business in. For whatever reason, they said, hold up, we don't want to go back to how things were. We're going to try to play around with Biden's ruling and stick in that playing field. So we are confident that we will be getting a year-long short-term medical option coming in the state of Texas. However, it might be a 3x4 or so 4-month plans back to back to back, 3 4-month plans back to back to back. We're working on getting that sorted out and created. And so as of right now, Texas is a no-go. Okay. It's not going to be in the quoting platform for you guys as we're sorting that all out. The rest of the states are pretty much good. Yeah, there's a call out for Florida. I'm not going to go through all 50 states, but Florida is definitely back to 36 months, which is one of our bigger states that we write in. Okay, so want to get that out of the way. The other thing I want to discuss with you guys is this is going to be a crazy open enrollment year. So if it's your first ever open enrollment, buckle up, right? But if you've been doing it before, this year is going to be a little bit wild and crazy because for the last few years, we have had, and when I say we, I mean the nation, our nation, have had juiced subsidies, okay? Everybody and their mother was getting a subsidy up to crazy income levels. Guys, I ran a quote just a day or two ago. I might have been on Monday. I ran a quote and I put a family of 4 with a $200,000 income. And I was like, there's no way these guys are going to get a subsidy. That's a good amount, so I can see what full price plans are. No, no, no. A family of 4 making 200 grand a year was getting a subsidy still, right? So that's been the market we've been playing in, and our customers have been playing in for a couple years now. Okay. That's getting pulled back and getting pulled way back. So I don't, without boring you guys, getting too far into the weeds, for years, we used to give subsidies up to 400% of the federal poverty level. So the government has a chart where they determine this income for this size of family determines if you're where you're at in this federal poverty level chart. And they would pay up to 400% of that, or 4 times poverty. For the last few years, there were some states and some situations that were paying up to 800%, up to double that. Okay. So everybody was getting a subsidy, and some of them really nice, really big subsidies. Okay. That's getting pulled back to this 400%. So there's going to be families that were getting help paying for health insurance plans that are either going to be getting no help going forward this year, or they were getting significant help and it's going to be pulled back and they're going to be getting very little help. So a lot of our customers, what they've been used to for the last few years on what Obamacare costs them in particular, there's going to be a lot of change to that, right? There's going to be a lot of upset people being like, I can't afford to pay this for health insurance. And they're going to be looking for you. Do you have alternatives? And so short-term medical is coming back at the perfect time because it really is that alternative. Okay. So a couple things about the plan, and I'll reiterate some of these as we're walking through. Okay. Office visits for everyone. Deductible is waived on urgent care visits. I'll make that make more sense to you later, but that's a really big selling point. There are copay options for prescription drugs. You could start as soon as tomorrow on these plans. So a lot of good stuff. And then it says multiple plan designs available. So there's going to be 5 levels of plans that I'm going to share with you guys. Okay. Is short-term medical major medical? Absolutely not. And that goes back to this first big slide here. It's to say, do not mislead your customers and tell them that short-term medical counts as major medical or Obamacare. It does not. It is short-term medical. In many situations, it's a better plan, but there are some limitations, and I will go over those with you guys. Okay. So 5 different plan designs. Okay. The first level that we'll go over is called the copay enhanced. It's our most expensive one besides guaranteed issue, and it has some copays built into it. We'll talk about that. Then there's the enhanced version. That's our best seller by a long shot. We'll go over that. There's the essentials version, which is not sold a lot of. It's the cheap bare bones one. Then you have guaranteed issue. Expensive and not for everybody, but we'll talk about the situations for that. And then the 5th option, the very last one, is our HSA eligible ones. And so we have some short-term medical plans that will be HSA eligible, and we'll talk on those. Okay, so 5 levels of plans that we could sell. That's all of them. The first one we're going to go over is the copay enhanced. Copay enhanced PPO. Okay, now, first thing, one of the big selling points with short-term medical, it is nationwide PPOs. Okay, I'm not answering the HSA question until we get to the slides. We'll get there. Copay enhanced PPO. All of the Allstate short-term medical plans are nationwide PPOs. That in itself is going to be a major selling point over Obamacare, right? The affordable, the cheapest Obamacare plans are all going to be HMOs. If you go a little more expensive, they'll go up to EPOs, but you don't even have too many PPO options on Obamacare. Here, we have nationwide PPOs. You got the biggest and best networks right here on short-term medical. That's a major selling point. The copay level has attached some copays to it. Now, first thing, guys, when you're selling this, you can see the 4 different deductible options. I am always going to go to 100% coinsurance because if it's easy to explain, it's easy to sell, right? And so what this is going to sound like if I'm talking to my customer, Mr. Mrs. Customer, the way I put this plan together for you, you're going to have a $6,000 deductible. But after you've reached that, you're going to be at 100% coinsurance, meaning the insurance company is going to take care of every bill that you have after that up to $5 million, right? That's how it sounds to sell this, okay? So that's easy to explain, easy to sell. As opposed to Mr. Mrs. Customer, the way I've put this plan together for you, I have a $4,000 deductible. And then after you pay $4,000 out of pocket, you and the insurance company are going to split bills at a 75-25% from there. Okay, so the insurance company will pay 75, you'll pay 25% up to another $7,500. Then once you've paid the $4,000 and another $7,500, now the insurance company will kick in and take care of everything up to the next $5 million. Okay, you see how it just doesn't flow as good? It doesn't sound as good. So I like 100% coinsurance. The question was asked, is the deductible per person? It is. It's capped at 3 people. I'll explain that to you in a couple more slides. But what that means is if it's an individual you've sold to, $6,000 is their out of pocket, period, end of story. If you sold to me and my wife, it could be $12,000 of an exposure. Nick has $6,000, but my wife also has $6,000, okay? So that could be up to $12,000. And then if we add our children, whether it's 1 child or 10 children, that is its own third deductible. And so on this plan, the maximum exposure could be $18,000 if all 3 family members hit their deductible in a year. Okay, good question. And I'll reiterate that in another couple slides. Here's what the copays look like if your customer's looking for a copay plan. It's $40 primary care physician, $60 specialist, $10 generic drugs. Now that $3,000 maximum benefit you see on the generic drugs, that's its own separate deductible or separate category. So that does not count towards your deductible or out of pocket. Okay. The primary care physician and the specialist, those are capped at how many visits you can do in a year. It is, here you go. It says it in the fine print down here at the bottom. If the policy is 6 months or less, an individual, so if it's just sold to me, will only get 1 office visit copay, and families will get 3 if it's 6 months or less. If the policy is 7 months or greater, which most of us is what we're going to sell, right? A 12-month plan or a 36-month plan. An individual, Nick by himself, will get 2 office visits and a family will get 4, okay? And that's in a per year. So what most of us are going to sell, you're going to get 2 and 4. 2 for an individual, 4 for a family on these, okay? That is how the copays work on the copay enhanced plan, okay? Most of our customers have determined that the cost doesn't outweigh the benefit on this plan because it's not our top seller, okay? Our top selling short-term medicals by a long shot is this next one, the step down called the enhanced PPO. Now, the trade-off here is you're not going to get those copays I just went over on that last slide. You don't get those. Your customer does not get those, okay? Now, if you can't tell by this slide, there is way more plan options available here, so it could be a little bit overwhelming, right? But our best sellers by a long shot is $5,000 deductible, 100% coinsurance, or $10,000 deductible, 100% coinsurance. The market has determined that that's a good price point for value. You will also see agents sell $5,000 deductible 80/20. That does get sold a good amount as well. I personally don't like 80/20. I just like 100% coinsurance, but the market does eat the 80/20 up, so you guys do what you want with that, okay? I want to make sure, call out one big thing. The coverage period maximum on the enhanced is $1 million, not $5 million. Okay. That shouldn't be a concern to the vast majority of you. I mean, I talk to agents every day. The amount of agents that have a customer that hits $1 million in a year, very rare, right? And if you are that agent that has that one customer that's getting close to $1 million, when it comes to open enrollment, we'll move them to Obamacare, right? So it's not the end of the world, anything like that. If this customer is having a rough year and they're getting up there in their medical bills, at open enrollment, we're going to look to transition them over to Obamacare, right? At that point, they become too expensive or too risky for short-term medical. But for the people that can qualify for short-term medical plans, it's not an issue. It's not a concern, okay? The next level down is called the Essentials PPO. You guys won't sell a ton of this, okay? This is sold to maybe the 20-year-old college student whose parents are not paying for his health insurance. This guy's on his own, 20 years old, and just needs a cheap plan. He's not planning on going to the doctor, but his mom has told him he needs health insurance. He wants to pay for a plan, but needs it to be cheap. He's not really trying to use it, right? That's kind of this plan, right? You can see the coverage period maximum is only $250,000. It's not a sexy plan. It's not made to be the best plan out there. Everything's a 60-40 coinsurance, right? So understand, this isn't a plan you're selling to somebody that needs insurance, right? Or needs good insurance, right? This is really for somebody shopping on the budget. Let's call it what it is. That's where these essentials come into play, okay? Then you've got the guaranteed issue. These are expensive, guys, because what these are saying is anybody can get the plan, right? Anybody can come on board and get this plan. You don't need to pass a health questionnaire. So these are riskier customers, right? These are riskier people we're bringing on. So these are going to be more expensive plans. The deductibles are decent, $3,500 or $5,000. Coinsurance is decent, 80-20 or 90-10. But the coverage period maximum is only $100,000, right? Also, I need to call out, if you're newer to insurance, when you hear this guaranteed issue term in private market plans like short-term medical, it's not the same as Obamacare's guaranteed issue, okay? On Obamacare, when you hear guaranteed issue, it means everybody can come on board and we're going to pay for all of your stuff, okay? That is guaranteed issue on Obamacare. When you hear guaranteed issue on short-term medical, it means, hey, everybody can get the plan, but there's a big but on here. We are not going to pay for your pre-existing conditions. You can get the plan. So if you get the flu or something, or if you trip off a curb and break your ankle, we'll pay for that. You have insurance for that. We're just not going to pay for the stuff that you're bringing onto the plan with you, okay? So that's how guaranteed issue works. And no, guaranteed issue is not available in all states. Short-term medical as a whole is not available in all states, okay? All right, and I'll show you guys the states in a second here, so don't worry, we'll go over that in a second. All right, this is the back end of the brochure. We try to keep things simple because, again, simple leads to sales. So first thing, if your customer asks, what happens on this nationwide PPO if I go out of network? We keep it simple. They can expect to pay about double if they go out of network, okay? Simple stuff there. Then you've got the family deductible, and I already explained that one to you guys, right? It's capped at 3, so each person has their own deductible. It doesn't bleed into the other. So if Nick, his wife, and my kids are all on a plan together, and Nick gets cancer or something, I'm just going to the extreme, right? Nick is capped at his deductible, at his individual deductible, whether it's $5,000, $10,000, $6,000, wherever I put it, I'm done. And that's all the exposure is going to be. My wife and kids, they're not running theirs up unless they have medical issues as well, okay? So really where the risk comes in on that big out-of-pocket exposure would be like a situation where, like, maybe if the family got in a car accident together and everybody got hurt, right? Well, that's going to be, Nick's going to trigger a deductible. The wife's going to trigger her with her issues, and the kids are going to trigger with theirs, right? That's a situation where you could all kind of be running into that maximum exposure. But for the most part, it's not something we see too often, because most people's ailments are themselves, right? And you as an individual cannot go over your individual deductible. Okay. Cool. All right, doctor's visits. It applies to deductible and coinsurance unless you're on the copay option, right? Now, what that means, guys, when it says applies to deductible and coinsurance, that just means you're just going to pay for the doctor. Whatever the doctor costs in network, you're just going to pay the doctor's costs, okay? Now, check this out, urgent care. This is why most agents sell the enhanced PPO and not the copay enhanced PPO. I'll get to that, Leslie. We have questions coming up in a little bit here on what those underwriting are. Urgent care, $50 access fee. The deductible is waived, and the remaining cost applies to coinsurance. What does that mean? Well, guys, this is used as a $50 copay to go to the doctor. Check this out. So let's say you wrote somebody a $5,000 deductible, 100% coinsurance plan. $50 access fee, the deductible is waived, and the remaining cost applies to coinsurance. Well, if you're on 100% coinsurance, that means there's no remaining cost, right? So you guys can write the enhanced level PPO, and for your customer to go to urgent care, it's a $50 access fee, or, so you can consider it a $50 copay, essentially, without copays being built into the plan. Pretty cool stuff, okay? Now, ER is kind of written similarly, but a little different. Unlimited visits, $250 access fee unless admitted. But look at the last line. Applies to deductible and coinsurance, okay? What this is saying, guys, is if your customer goes to the ER, they're going to pay full price at the ER, and we're going to slap a $250 fee, kind of like a penalty fee, on them on top of their ER bill unless they're admitted to the hospital. So why is that, Nick? That sounds kind of rough. Well, guys, the number one reason that people go to the ER in the United States is for the flu. Stupid. Absolutely stupid. The ER is the most expensive medical billing platform out there. So what we are trying to do in our short-term medical plans is we're trying to educate the marketplace on how to use insurance more wisely. So we're trying to say, stop going to the ER for small stuff that you could literally go to urgent care for, okay? Go to urgent care for all the small stuff, and it'll be $50, and you're good to go, okay? But if you go to the ER and it's not an actual emergency that has you admitted to the hospital, you're going to pay full price plus $250, okay? So essentially, if you can drive yourself to the ER, you should probably be going to urgent care instead, okay? The question was asked, if coinsurance is not 100%, how would the cost for the visit be calculated? You're going to get a $50 access fee, and then you're going to follow the coinsurance percentage for the rest of the bills that you get at that urgent care. Simple enough. So if you're on an 80-20, your customer is going to pay 20% of whatever that urgent care is, plus the $50 fee. So why would you write somebody anything that's not 100% coinsurance? Don't mess with that. Don't make life harder on yourself than it needs to be. Write 100% coinsurance, and then you've got this cool copay option worked in there for your customer at $50, okay? Don't make it harder than it needs to be. That is how the plan works. There's a question, do they get pre-negotiated rates or full pay? It depends if they go in network or not. But if you go in network, you're going to for sure get a network discount on your bill. Absolutely. Inpatient services, this is normal. It just applies to deductible and coinsurance, meaning they'll pay for it. Outpatient services, same thing, normal, applies to deductible and coinsurance. That's like your outpatient surgeons, anesthesiologists, office, stuff like that. One call out. if they're on the cheap 60/40 level version, that essentials PPO, the one for the kids and stuff, that has a $15,000 outpatient limit. Okay. Child immunizations, first dollar benefit. For those of you new to insurance, first dollar means the insurance company's paying for it. Insurance company's paying first, so child immunizations are paid for. Okay. And adult screenings apply to deductible and coinsurance, meaning they'll pay for that. There's 2 networks you can choose, Aetna or Cigna. The system will default to the stronger network of the 2 based off the zip code that you type in. However, you can swap back and forth and quote either network, check the doctors and hospitals in them and see if one is better for your customer. They do cost different depending on where you're at. So maybe cost is the factor that plays. Maybe there's more doctors in network on this plan. All right, this is the first page of the state availability, okay? If you see both networks there, that's a good state. If you only see one, it's not saying it's a bad state, but be aware of that. You guys are going to want any of the states that have consecutive and renewable checked. Those are the states that can go 2 or 3 years in length. Okay, so those are the states you want to be selling in, you want to be licensed in. Okay, it'll say 12 months here, but renewable or consecutive means they can be back to back and usually go 2 or 3 years in length. Okay, so if you see that there. Then over here, same thing, although ignore Texas. That's not currently correct. We are working on getting Texas sorted out. We just didn't update our slides from like last year's slides. Okay. The states that you see like 3-month plans, those are ones you probably like don't want to write a lot of, right? 6-month plans, those are states for the most part you're going to be avoiding, right? It's not as sexy of a product there, but that's there. Okay. All right, that is the first 4 levels of short-term medical and how it works. Now we're going to get into the HSA compatible levels, okay? Now these ones work differently. So we're kind of switching gears here. There's going to be some differences here from the regular short-term medical. First thing to understand, guys, you are not an investment broker, analyst, advisor, anything like that. So you're not to be advising your customer on how to invest in HSAs or anything like that. If they have questions about it, you direct them to where they do their banking or investing, okay? They'll be the ones to help them get that account set up. Maybe they already have an account. They'll be the ones to help them put more money into it, invest in that, all that. All this is a health insurance plan that meets the government's requirements for your customer to be able to put money into an HSA. Hopefully that all makes sense for you guys, okay? So this is going to enable your customer to put money into an HSA account because they have a qualifying health plan. It's called a high deductible health plan, okay? That's what the government calls these, okay? That's all this is. So we are training you on a health plan. If they have questions about HSAs or how to invest and all that, send them to their bank, okay? If it's a customer who already has an HSA, they sign up for this short-term medical and then they just can continue depositing money into that HSA account. If they do not have one, contact their bank or investment party and they can go ahead and get set up with one, okay? So this is the levels of the HSA short-term medical. Remember, these are government qualified, so they have to be a high deductible health plan. So they got $6,000 times 3 or a $7,500 option. I still like the 100% coinsurance options here, but most of this, besides the 6,000 100%, most of these just end at a 7,500 out of pocket, right? 6,000 plus 1,500, 6,000 plus 1,500, or 7,500. So most of them are ending at 7,500. Let's just call it what it is, okay? $1 million coverage period maximum, so it's going to feel a lot like the essentials that like the enhanced PPO that we're going to sell a lot of over there, okay? But this is good stuff. Now, Some of the stuff works a little bit different on these plans on the back end, okay? Out of network, it's still double, so that's good. The family deductible on these ones, on the HSA ones, is capped at 2 family members, not 3. So if you're selling an HSA version, it just says it's not available in South Carolina. You can see it at the very bottom down here, 28, not available in South Carolina. Nothing crazy. Not worth the call out, but it's there. Family deductible is capped at 2 on these, not 3. Okay, so husband, I have my own deductible. If I add my wife, she now has a deductible. Now, if I add my kids, it's just secondary. So it's husband or primary, and then secondary insureds, wife, kids, all that fun stuff. Family, let's just call it that. Okay, so this one is capped at 2 instead of 3. For some customers, that might be a good trade-off where they want to go HSA instead, depending on cost and things like that. Urgent care, though, does not have the $50 copay here. ER doesn't have the penalty. Urgent care does not have the $50 access fee. So those go away on the back end here on these plans. So that's another trade-off. Maybe valuable, maybe not for a customer, right? And then this is one of the other big trade-offs. So the two biggest trade-offs, urgent care is a big one. The $50 urgent care is a big one. But to me, the two biggest trade-offs, family being capped at 2 versus 3. And then scroll to the very bottom here, and adult preventative screenings and immunizations are now a first dollar benefit. So the regular short-term medicals do not cover adult screenings and immunizations at a first dollar benefit. Those just cost. They go to deductible and coinsurance, okay? These are covered. No, not well checkups. It's just child immunizations, not checkups like that. But good question. But adult preventatives, those are covered. But they have laws or rules on where the adult preventatives come into play, right? It has to be normal for the adult preventive. So like, for example, NICS 38, I can't just go order a colonoscopy tomorrow and this plan's going to pay for it. It's going to have to follow the schedule. And I think, don't quote me on this, but I think for males, that's moved up to 50 now. It used to be 40. My whole childhood at 40, you had to get that colonoscopy. I think it's 50 now. So this plan won't cover it because it's not normal screenings, right? It's not a normal preventative screening until I turn 50, okay? So that's, understand how that works, all right? This one only uses the Aetna network. This is not an Aetna or Cigna, okay? Only uses the Aetna network. And then here are the states it's available in. Very limited as far as the states that these HSAs are available in. I have no news of this list expanding anytime soon. So this is the states it's in currently. All right. Some people were asking about the underwriting questions. So that's going to be this. Guys, short-term medical, one of the big trade-offs between it and Obamacare besides the cost. If somebody's going to have to pay a full price Obamacare plan, meaning they're not getting a subsidy, which that's going to happen a lot come this open enrollment, right? I'll give you guys a really good example. I'll just give you my family. My family of 4, the cheapest, meaning the worst, the cheapest bronze Obamacare plan for my family of 4 is right around $1,200 a month. Unfortunately, I make too much money. I don't qualify for a subsidy, okay? It's a good problem to have, kind of. But with no subsidy, literally the cheapest crappy bronze plan, $18,400 deductible, no copays, the worst, $1,200 a month for my family. On an HMO network, just, it sucks. For my family of 4 to be on a nationwide PPO short-term medical plan, $5,000 deductible, 100% coinsurance, It's about 500 bucks a month, about 550 if I'm being honest, about 550. Less than half of what it would cost for me to be on the worst bronze plan. Okay? So whether your customer is going to want or not, it's not a question. The cost is going to be a huge factor. They're going to be like, give me the short-term medical. It's a nationwide PPO. It's a stronger plan, better deductible. Why would I go on Obamacare? It's a no-brainer, right? So here's the trade-off on why they might need to go Obamacare. It's because you got to pass a health questionnaire. Just because you like short-term medical doesn't mean you can get it, okay? You have to be able to qualify your customer for it. That's how they keep the costs so low, is by making people qualify for these plans, okay? So they can say, hey, we know nobody on short-term medical has cancer because we screened them all out. So we know we're not going to have all these crazy medical bills for cancer that we're going to need to pay for on this plan, right? So that's how they keep the costs so low. So first thing, child as young as 60 days old could get the plan, 2 months old, and you can have it up to the Medicare age, okay? Now, the reason that we cover children at 60 days old is going to go into this question that was just asked of me in the chat, and so I'll answer that for you in 2 slides here, okay? There's weight limits. 300 pounds if male, 250 pounds if female, okay? So, ladies, I don't care if you're talking to Dwayne The Rock Johnson, okay? And you're like, Nick, but Rocky is my customer. He's like the most healthy guy in America. 6'6", 360 pounds of just chiseled mass. Can he get the plan? Is he over 300 pounds? And if he's 360 pounds, unfortunately, it does not matter how beautiful, how strong, how in shape he is. This is simplified underwriting. He can't get this plan, okay? Now, are there other plans we might be able to put Rocky on? Absolutely, but this one, no. Okay, now if your customer is 305 pounds, I might ask them, what does it say on your driver's license, right? Like if your driver's license says 290, cool, we can ride it, we should be fine. What you guys want to be aware of is they're going to pull a medical history, right? And so if they pull a medical history and over the last 5 years, your customer used to be 400 pounds and he's worked all the way down to 305, I'm going to hold off on writing him because his medical history is going to show 400 pounds, 375, 350, 325, 305. And Allstate's going to be like, when have you ever been under 300 pounds? We're not going to write that, right? But if it's like most of us, and I mean, you guys ask me my weight any given month, it's going to be in about a 15 to 20 pound range, right? I mean, my weight's anywhere like this any given month. Just depends how many sweets I had the night before or something. But, you know, I've got about a 15 to 20 pound range I could be at any given month, right? If that's your customer, you should be okay, right? They're at 305 right now, but maybe they're 290 normally. Okay, so that's kind of how I would say to determine that for you, or how to err on the side of caution there, okay? You guys will always need to read this bottom statement to any customer when you're doing the application. It says, hey, Mr. Customer, just need to let you know any false, inaccurate, or misrepresented statements on this enrollment may result in a claim denial, premium changes, or contract rescission. They're going to say yes, they're going to sign it, cool. Then you don't need to worry about it. Your customer signed off on this. I don't need to fight them. You know, that's on them. I'm at peace. Okay, here's one of the big groups of questions, and there's one more slide with even more questions. But somebody asked me in the chat, does short-term medical cover pregnancy? It does not. Very, very common on the private market side of things that short-term medical does not, or most private market does not cover pregnancy. Is it only Robin that can't hear me? Yeah, okay, so it's only you, Robin. It's a you problem. So cool. So on most private market products, short-term medical is not covered. Okay. I mean, sorry, pregnancy is not covered. And that's the same on short-term medical. Okay. Says, are you pregnant, an expectant parent in the process of adopting or in process of surrogate pregnancy or undergoing infertility treatment? Okay. This also counts for husbands. Okay. Husbands cannot get the plan either if they are to be an expectant parent. Okay. Now, why is that? It's going to sound really ugly, what I'm about to tell you here, but I'm just here to hit you blunt, all right? I'm not here to be sexy. I'm just here to hit you blunt with what this is, all right? We are able to keep short-term medical costs so low because we filter who we allow to get these plans, right? Well, there is a federal law that states when a child is born, whatever the parents have for insurance, mother or father, has to cover that child as it comes out. So what we're trying to do is say, look, we don't know what that child's coming out with, so we don't want nothing to do with it, okay? We're not going to touch children until they're 60 days old. That sounded a little bit wrong, but we're not going to pick up children on plans until they're 2 months old, okay? And again, the reason being on that, it's not a sexy reason. It's we want to know, does this child have some issues? Does it have cerebral palsy? If so, like, no offense, we don't want to pick up those medical bills, right? And so we're not going to let any pregnant, any expectant parent on this plan until the baby's been delivered and we know what that baby is or what issues they have, if any issues, right? That's the reason for that. I probably didn't make a lot of friends telling you that, but that's the reason, okay? In the last 5 years, has an applicant received medical or surgical treatment, consulted a healthcare professional for HIV or AIDS? Look, guys, even Magic Johnson, I believe, I'm not his doctor, but even Magic Johnson is still taking pills, I think, okay? You see how it says, or had a medication prescribed or recommended in the last 5 years? So for me, guys, HIV or AIDS, forget 5 years. It's always, right? If you've ever had HIV or AIDS, I don't know that you're going to ever be off of taking pills. So it's a knockout, okay? In the last 12 months, has an applicant been recommended or scheduled for testing, treatment, or a follow-up or surgery that hasn't been completed? Well, we're not going to pick it up. That's your old insurance that should be paying for that. Have you consulted a healthcare professional for signs or symptoms of a condition or a diagnosis that we haven't yet determined? We're not going to pay for that. Again, that's your previous insurance, that whoever you were at with that doctor at that time, okay? And then here's the big catch-all. In the last 5 years, has an applicant received medical, surgical treatment, consulted a healthcare professional, or has medication been prescribed for any of the following, okay? So some of these, I would say, also kind of like HIV, might go back further than 5 years, okay? I'll use a good example here, like cancer, okay? If you had childhood cancer at 3 years old and you beat it and you're fully healthy now and you're 40 years old now, okay, and you haven't had cancer for 30 some years, okay, if your doctor is doing their job, every year when you go for a follow-up, they should be asking you about cancer, right? Running skin grafts, running blood tests, saying, hey, any new lumps, anything that we should be aware of. It's going to show in your medical history that you've consulted a healthcare professional for cancer in the last 5 years, more than likely. So I would say that's probably like a full-on knockout, right? But for some of them, maybe it is done after 5 years, right? Like alcohol abuse, you probably go get treatment, and then if you're sober for more than 5 years, you're probably good, right? Like that's probably not something that needs to come up again. So things like that. Lynn, that is very minor. So Lynn asked, what about a hernia outpatient surgery that was done previously? That's not a knockout, Lynn. That's nothing that's going to knock you out here. Okay. Now, there is a pre-existing clause for 12 months. So if they got short-term medical, again, that's not a knockout, having a hernia surgery, okay? But that would be considered a pre-existing condition, not a pre-existing that's going to knock them out from getting the plan, but it's a pre-ex where we're not going to cover it for 12 months. So if something goes wrong with that hernia in the next 12 months, we're not going to cover it. If something goes wrong at month 13 or on, we'll pick it up. We got it. It's not a serious pre-existing. We'll pick it up. Give you guys another example. Nick's got a bad knee. I've had a bad knee for probably 15 years. At some point, I need to go get a reconstruction surgery. I'm just cheap. I don't want to pay the medical bills, okay? But my knee is 1000% a pre-existing condition. It's in my medical history, right? But it's nothing serious enough where they're going to knock me out from getting the plan. So if I got the plan in month 13, I'd be able to go get my knee worked on, okay? There's a question, if someone is on a short-term medical plan now and wants to enroll in a short-term medical plan for 1/1/26, will they be eligible? Yeah, in most states. In most states, it really depends on the state. Like, again, Texas is being a little bit weird right now. So Texas, no. Some of your heavily liberal states, like I live in California, no, you're not going to be able to rewrite them in California. There's not even going to be a short-term medical in California. So that question is state-specific, Leslie. But in a lot of states, yeah, you'd be able to rewrite them. No big deal. Yeah. Kidney stones. Yes, that's a kidney disorder. Yes, that would be considered in the last 5 years. If they had kidney stones, that would be a kidney disorder. Absolutely. Yeah. Cool. All right. So that's the questions your customer has to pass to get the plan. If they can't pass it, they can't get the plan. It's that simple. That's how we keep the costs so low, right? So there's two reasons somebody might go to Obamacare. They're broke, so they're getting a good subsidy, or they can't pass the health questionnaire. They've got pre-existing conditions. Those people need to go on Obamacare. But if you're talking to a customer that's healthy or wealthy or both, they're not going to get a subsidy if they're wealthy. And if they're healthy, they're going to be like, why am I paying for all of this stuff on Obamacare that I'm never going to use? They're going to want to come on short-term medical, okay? There is preferred rates. So there are some questions that get asked to get your customer. I think it's a 20% discount for preferred rating, okay? They're difficult questions. Not a lot of customers qualify, but there are some that do. So it's more questionnaire. First, you have to have had insurance for 9 of the last 12 months, no tobacco or nicotine use within the last 12 months, no DUI or more than one moving violation in the last 2 years. You can't own a motorcycle. It's a fun one. And own a motorcycle means registered to you, right? Registered to you. That means you are the owner of the motorcycle. Have not been treated. This is the big one. This takes out at least half of America. Have not been treated or prescribed medication for high blood pressure, high cholesterol, anxiety, or depression in the last 5 years. Well, there goes everybody, right? And then you have to weigh under 240 if a male or 190 if female. I'm barely making it on the female weight. I'm good. I'm at like 182 right now, so we're sliding in there. No, all right. Only the primary applicants can get preferred rates. Children cannot. Okay, so it's only the husband or the wife that can get a preferred rate. One cool thing with preferred rates, one or the other can get it if the other doesn't. So like if I qualify for preferred rates, but my wife doesn't, I can get it and she'll just pay full price for hers. That's fine. Okay. Is there a discount for paying the entire premium up front? There absolutely is. I think it's a 10% discount for paying a whole year up front. All right, you guys are going to see when you're running quotes, especially depending on the states that you're running it in, okay? piggyback on the discount question, can extend coverage for 12 months after that. That's a state specific question. Some states, yes, you can absolutely extend coverage. Some states, no, you're limited and it stops. So it's a state specific question. All right, renewable and consecutive. The states that do renewable and consecutive are the states you would be able to extend, okay? Renewable plans are the ones you guys are going to sell the majority of, okay? You're going to see those in the quoting platform. It's going to have a drop down, and there's going to be a 24-month or a 36-month option. Those are the renewable plans, okay? And what that is, guys, is it's just keeping your customer rolling year after year, okay, on the same plan for either 2 years or 3 years, okay? Yeah, it was the states list I already shared, Robin. You can just pull up the brochure and it has the states list with check marks on consecutive and renewable. Yeah, it is. All right, so renewable, 2 or 3 years in length. Most of the time you're going to do 3 years in length, okay? One of the call outs on renewable is the coverage period maximum does not reset. So remember that $1 million coverage period? That $1 million is for all 3 years if you write somebody on a 3-year plan on renewable plans. Okay, so that's one of the trade-offs. Again, not a huge deal. We're selling to healthier customers here. But if your customer starts getting to the end of that and they're getting to that $1 million, we'll move them over to to an ACA plan. No, the brochure won't be emailed. It's public. It's in the quoting platform. You can literally download the brochure right there in the quoting platform. At the top of any product, the quoting platform has every brochure you could ever want. One of the big selling points on the renewable plans is the rate guarantee option, okay? And in the quoting platform, that will say fixed rate, okay? That is my preferred writing option. So I'm going to try to get in here and run a test quote for you guys, but I'm going to do this while this slides up. I'm going to do it in the background here, okay? So I prefer to have a rate lock or fixed rate. What that's going to do, it is going to be a little bit more expensive this year for my customer, but it is going to make it to where that evens out over the 3 years. So your customer is not going to see a big rate jump next year, okay? So I'm in the quoting platform. Let me pull this up for you guys so you can see this, okay? Let me make this a little bigger for you guys. All right, we're going to go to short-term medical here. 6 foot, 180. Okay. All right, so this is what it looks like in the quoting platform, all right? You come in here, you're going to select term length. 24 months or 24 rate lock, or 36 months, 36 rate lock. Those are all renewable, the first ones that you're seeing, okay? Now, if you do a 36-month without the rate lock, it's going to be cheaper right now. So I want to show you guys $5,000 deductible, 100% coinsurance is $703.81 without the rate lock. If I do 36-month rate lock, that is now $797. So it's almost $100 more a month. However, year 2 and year 3 is going to be a much different experience for your customer. So on this rate lock one, we've already evened out normal rate jumps in the industry into this plan. So they're going to pay more year 1, but year 2, it might only go up $5 or $10. So it'll go up to $805. And then year 3, it'll go up to $815 a month, right? Small, easy jump. If your customer does the 36-month, what happens is they qualify for new rates next year, okay, and year 3. And so normally, industry average is 15 to 20% that you're going to see a rate go up. I happen to be a math nerd, so let me help you guys with this, okay? 20% of $1,000 is $200. So it's going to be about $150 that this is going to raise between year 1 and year 2, just under $150. So on this one, yeah, it's great this year. They're going to pay $703. Next year, it's going to renew to closer to $850 a month for them. And then year 3, that'll go up closer to $1,000 a month for them. That's the experience, just to save your customer a couple bucks year 1. So remember, your customer's not seeing all these rates. I like to just do the rate lock and just say the cost is $800 a month. That way, year 2 and year 3, it stays closer to that $800 instead of launching up on them. I like that better, okay? So that is the renewable options. That's how that works, okay? Then there's consecutive plans. Consecutive. That is 2 12-month terms, no renewal. That is back-to-back 12-month terms. So a couple things are going to happen here. One, there's going to be a rate increase. They're going to re-qualify at year 2. They are guaranteed to get the plan, though, because they signed up for 2 years early. They're guaranteed to get the plan, okay? The bad news is they're re-qualifying, so the rate can have a significant jump. The good news, I'll go back to my slide for this, is on the consecutive plan, the coverage period maximum resets because it's making them apply for a new plan over. So that $1 million, they would have $1 million year 1 and $1 million year 2, okay? But look, it says rate shown at the time of purchase may vary with each policy term. So it's letting you know they're going to have a different rate next year. So that one's not sold as much. But if you're asking me, I do the rate locks, 24 or 36-month rate lock. I'm okay with my customer paying a little bit more today for a better experience year 2 and year 3, okay? Chanel, the rate lock is going to even out. So it's not to say they're never going to see a price increase. It could stay at the $797, but it's saying that even if there's a really bad year in insurance, your customer's not going to be impacted by the 15-20%. But I have seen it where it's gone up $5. I have seen that. So, but it's nothing that's going to trigger a customer service call to you for sure, like a 15 to 20% bump is. Okay. Robin asked, what if some law changes and the 3-year option is prohibited by law? Robin, same thing happened last September, right? The way the law works, it's not, whatever the word is, it doesn't go proactive. So if you've had a 3-year plan, that plan's still good to go till it expires, okay? That's how that'll work, okay? So that's an idea. Oh, and then to the person that was asking about brochures, if you've never been in our quoting platform before, first off, shame on you. No, I'm just kidding. But download brochure is right here at the top of every single product. And it is that state that you're in, a state-specific brochure for that product. Easy stuff, guys, okay? So any product, I'm telling you guys, you would go to accident plans. There's plan enhancers brochure right there, right? Like any product you guys want, the brochure is right there at the top of the screen for every single product. It's enroll.natgenhealth.com is the website that you guys will be quoting out on here. Robin, you can cancel a plan at any time. All the customer needs to do is stop paying their bill and the plan gets canceled. Nobody's locked into a plan for 3 years. You are locked into a plan for 3 years to say you're protected on staying on the plan. But if you find something better, you don't have to keep paying that bill. So that's how that works, okay? Big thing to understand, guys, no matter if they go renewable or consecutive, the way that federal law works on health plans, every 12 months, so January to December, or every 12 months on the plan, the deductibles reset and the maximum out of pocket resets, right? Those are annual, okay? That's correct. Leslie asked, what is the grace period for paying a bill? Well, first, to start the plan, there is no grace period. They need to have a payment collected at least 1 day before the plan goes into effect for that. Other than that, if they miss a payment, I want to say it's a 5-day grace period if they miss a payment before that plan expires, before it can go, can keep it alive and going. I want to say it's 5 days. Cool. Skip over life association, not as important, but it does come with it. All right, so limitations and exclusions. We already went over maternity, that's in there. Cosmetic services, guys, this isn't going to pay for your boob job or your butt lift, anything like that, okay? We're not going to pay for skydiving or black diamond skiing, hazardous activities, things like that, okay? We don't pay for mental illness or substance abuse. These are all very normal things. One big call out that's coming up more and more often now is weight control, right? So this plan's not going to cover your Ozempic, okay? That everybody in America is on nowadays, right? We are not paying for weight control on these plans. That used to not be a big deal. It's becoming a bigger deal in recent years, right? Those are fine. There's nothing that says anything about college sports or anything like that here. Okay, those are fine. Sports are not a big deal. Now, if they're playing like NCAA intercollegiate sports, they don't need our insurance anyway. There's already insurance on them. Those leagues have insurance. But if they're playing like intramural, or they're playing high school, or they're playing the travel team for baseball or something, those are all covered. Those are fine. But yeah, they don't need this plan if they are playing intercollegiate. Okay. The enrollment, somebody asked about the enrollment. Okay, any day of the week you can enroll. You could literally start a plan tomorrow if you guys wanted. Just understand the payments are always going to come out the 1st through the 28th of the month. So if you write somebody on the 29th or on the 30th or 31st, we're taking that payment out the 28th of each month because February comes around once a year. We don't want to mess that up, okay? We take routing and account number or credit cards. I say this lovingly, but only bad agents take credit cards for payments. You guys should never, ever, ever take a credit card for payment, okay? Always get their routing and account number. Credit cards expire all the time. There's fraud on credit cards all the time. Credit cards are being canceled all the time. I don't want my commission being impacted by that. So I get a routing and account number. Nick, and I'm not a rarity in America. I am one of the normal. I've had the same routing and account number for 21 years now, since I was 17 years old, right? That's most people. Your routing and account number is not changed, so get that, okay? Just get that for your payment. The application fee is, I don't know, $35, $50. I don't know what it is. Run a quote in there. It's just normal. It's thrown on the application there. Here, actually, let me show you right here. There you go. Let me put a short-term medical here and see what it says the application fee is. Close that. I don't care. $15 life association. Let's $35 application fee. There you go. I don't know. Yours might say $50. I don't know. But it'll tell you right there in the shopping cart. Okay. Cool. All right, you guys, if you've never done anything with Allstate before, you should bookmark this website. It's allstatehealth.com, okay? This is going to be your best resource for information, okay? The monthly fee that was just right there was 30. Oh, not monthly fee, it's an application fee. It's a one-time fee, was $35. Monthly fee is different for different ages, different everything, okay? Allstatehealth.com. Bookmark it. If you guys go to agents and brokers, you guys will be able to get brochures, marketing materials, trifolds that you could have out on your desk. You'll be able to get access to our YouTube channel that has all of our training videos on it, anything like that, okay? You can also click on existing customers. You can find doctors and hospitals on the networks. You can submit claims, get claims forms, things like that, okay? This website you don't need to memorize. It's called myallstatehealthsolutions.com. Your customers get emailed this one, okay? Or get mailed this one. This comes in the packet in the mail. This is where they can go pay their bill, print their ID cards, things like this. This is a customer-facing website, myallstatehealthsolutions.com. And always, guys, make sure you're bundling. Always make sure you're throwing extra stuff in there. Some sort of accident plan. I love Plan Enhancer. Make sure you're covering catastrophic and then in dental and vision, right? Always, always, always add and bundle. Other than that, guys, that's everything I have for you. If you have any questions, hit up nghtraining@ngic.com or throw them in the chat. If you don't have any questions, I wish you all the best. Have a wonderful rest of your day and good luck selling out there.